everybody, this is Paul doing a quick little video here. The market is open. It is April 22nd, 12:47 Central Time, so middle of the day in the market. Uh, was doing good. Hopefully, one of these days I'm gonna get one of these videos out whenever it's like a positive and everything's going great, and I have like one of these amazing days. I was tempted to do a video yesterday just to be like, hey, see, everything's going great. So right now the portfolio says it's down $206. It was up $100 pretty much most of the day, but that's mostly thanks to me having a whole bunch in AT&T. A lot of dividend investors, pretty much everybody. Gen X dividend investor, Joseph Carlson. Everybody's been telling you, hey, AT&T, they might have some stuff going on here pretty soon, and they're kind of starting to show some like they're kind of getting their act together in their latest earnings report. So this is what it kind of looks like right now. Um, Up until maybe like an hour ago, I was up plus 100. So what caused all this? Basically, be this headline right here. And if you click into it, you find out really quick. So basically, Biden is proposing a 43.4% tax rate. And then, of course, the market freaks out because that's what they do. Because all they do is read the headline. Because, of course, CNBC, none of them include this part in there. Like, for those earning 1 million or more. This affects so little. It's not even funny how few people this affects, but of course, you know, any excuse to sell. This will affect the Bitcoin guys. A few of those guys who like are, the Bitcoin millionaire guys, if it actually passes, but there's such a small chance. Like, first of all, there's 0% chance this gets any Republican support. So automatically, the only way you can include it would be in the infrastructure bill. So automatically, you're going to get 0% Republican support on something like this. Even talking about raising the corporate tax rate from 20 to 25% already has a lot of the Republicans saying no. Something like this, there's no chance. And then also, like guys like Joe Manchin said that they wanted to be bipartisan this time around. Something tells me there's no chance this gets included. But like I said, the market's really overbought. Or certain sections of the markets are really overbought. And you can kind of see that in just how snappy these moves are. Um, once people kind of again, once people come in here tomorrow and think about this is probably going to be up tomorrow. Um, just for the reasons I listed, like, because you're going to have a bunch of Republicans jump on Twitter today. They're going to say there's no chance this is happening. So automatically, there goes your bipartisan support, and then everybody's going to ask Joe Manchin what he thinks, and he's probably going to say, no, there's no chance. Or Kristen Sinema what she thinks, and there's going to be like, no chance. The moderates are never going to go for this. What they're doing is they propose something. What the hope is they propose something really, really high in hopes of bringing it down to where they actually would have wanted it, maybe like 35% or something. But there's no chance. And also anybody who watches my channel, I mean, if you're making $1 million a year, you're not watching my channel. Like, you could hold bonds and make more than a lot of people do in a year. Like it's hilarious. So yeah, but Wall Street's freaking out currently because big red headline and talking about tax increases. Maybe the theory is that, oh well, if they're talking about going this high with the capital gains rate, oh, maybe they'll go like super high with the corporate tax. Well, even Manchin's already said you're not going above 25%. You don't have my vote if it happens. Like, I don't know, but so hitting refresh on my portfolio here is going to be hilarious while I'm doing this video. The good news is I am actually, well, prior to this little announcement that came out, I was up $1,000 from last week because I had a phenomenal yesterday. So my last video, I was up 54,031, and now I'm up 54,667. And then I guarantee once this filters through this whole little goofy thing, I watch around like maybe 2 o'clock, every 2 o'clock my time, it's gonna all of a sudden go up because there'll be a bunch of buying. So if you're looking to buy the dip, now is the time to do it. If you think this is a dip, like, There might be a few things in here to buy, maybe like IBM, Intel. There's a few things to buy, just these goofy things that are selling off more than they should. But so what I wanted to go over today in my portfolio is I added a position. So you'll notice that I'm missing Home Depot. Um, I got in a Home Depot on at 268, and it went up to I think it's at 330 or something like that. I gotta look at it right now. I'm not even sure where it's at, but I sold it and I made a ton on it. Um, yeah, it's at 318 now. But if you see, if I had held it even more, you see how it's kind of starting to reverse. Um, that's just people taking profits now. First of all, they're going to take profits now. It's so goofy. So they're going to take profits now. Even if that capital gains tax rate went through, it wouldn't even affect 2021. It would be 2022 that it would affect. It's people just panic selling stuff. So anyways, I got it at 268 or something like that, and I got out at like 327. Um, there's a few reasons I got out. First of all, I made a huge gain on it. It's a great company, but you can't have lumber prices up close to 70% in under 2 months and not think that that's a lot of contractors are gonna sit there and go, nah, man, we're gonna hold off on doing this project. We're gonna hold off on doing this project until this comes back down to earth. Um, so yeah, and if you look at what's causing the lumber prices, there was a CME report that I read over that kind of explained a few things. I had it somewhere. I might try to find it and link it in the description thing where it explains where a lot of the lumber prices and how they expect it to return to normal. It's not caused by regular inflation. It's just caused by supply. That's literally all it's caused by. It's just supply. It's, so, but I could see that easily hitting Home Depot's earnings if you have a lot of suppliers or a lot of contractors that are like, nah, man, I'm not paying $7 for a piece of 2x4. But you never know. Um, so I put money. So when I sold that, I put the money back into energy. I was looking for a power company that's not massively overpriced. Um, so if you look at, say, Duke, for example, let's go to Duke. Um, there's so many things to buy today on a dip. It's hilarious. So if you look at Duke, if you look at their PE, so they're trading at a 56 or something like that, or no, 57. Um, these are the big ones. Everybody always tells you they buy these because they have local monopolies. But the one I bought has a local monopoly. So, and then this one has a 22. Dividend yield's pretty nice on it, but I mean, you know, $65. So what I did is energy. So if you think Southern Company has a monopoly in like Georgia, Alabama, that area, and Duke has a monopoly in like North Carolina and that whole area, well, Next Era has a monopoly kind of in Florida. And then if you look at energy, they basically have a monopoly in multiple states. These are the people that actually are powering my computer right now. Um, so when they pay me dividends, I'm actually getting my electric bill back. So they're also, you know, dividend yield 3.5%, which is really nice. PE 16. I mean, that's pretty nice. Um, so that was the easy one. I was in there before, I jumped out of it, and I'm jumping back into it. Um, I'll probably end up adding a pretty large position. They also pay out on June 1st, which is not exactly what I wanted, but I could see easily adding a position in there and holding that for the next 30 something years. Like, they're not going anywhere. Um, they're not going to get bought by anybody. They're huge. At least I don't think they'll get bought by anybody, but their local competition is called Clico, so I mean, those two have been competing since forever. Another one that I jumped out of was Walgreens. That's another one that I was up like 50% on, or some crazy amount. I was up a lot on Walgreens. So I sold that for a huge profit. The reason I sold it, and I basically sold that and switched it out for CVS. And if you're wondering why I did that, so if you look at Walgreens, um, see how there's no PE number? See how their earnings are like this? It's because when you get a day like today, these are the types of stocks that will sell off a lot really, really quick. Also, the dividend pay date is in the middle of March, which means it's in the middle of June, which is definitely something I didn't want. So selling it I made a huge profit on it, capital gains. So hopefully I don't get taxed on that, right? With my $1 million I'm making a year. Um, so it's not near the first of the month, which is one of the things I wanted. It's also I'd made a huge gain on it. Also, it's got earnings that suck. Um, so if you look at their earnings, like they're just not good. Like their revenue is like okay. I mean, yeah, they got huge revenue, but there's something going on here. It looks like they're like in a rebuilding phase, so that's maybe like why the markets, but CVS is just outperforming them whenever it comes to like pharmacy and whatnot. That's because they actually, it's like CVS Health and they have the mail order thing going for them too. Um, Also, another reason I bought CVS is look at that. A 14 PE in this market right now. If you watch Joseph Carlson, he just did a video where he was like trying to find something to buy. I mean, even if you look at Pepsi, look at that, 27. I think even IBM, like IBM of all things, look at this, IBM at 24. It's crazy. I made bank on IBM yesterday, but it's like really anything like, well, General Dynamics is pretty good, but it's a lot of the things that you look at. So Cisco, for example, like 21, like the market is really trading above where it normally trades at. I think 3M, like 3M of all things, 21. Um, there's a lot of things that are like super super expensive. Like a lot of like Pfizer at 31 PE. That's crazy. Um, so what happens is when you do get a down day like this, you will notice like a lot of these stocks, like yeah, I guess this is a good example. Like if you look at J&J, J&J is a solid company, but they're trading at a 30 PE. So they're down like 1.12%, but if you look at something like CVS, it's down by like 0.7%. It was down anyways, but they just these types of things will dump very quickly on you when they have these kind of like look at Starbucks. If anything, on Starbucks, I might end up scaling it back or I might end up selling the entire position because I've made a 27% gain. Um, but as the U.S. economy reopens, I kind of expect Starbucks to maybe come back in on its P. But this P is ridiculous. Like they have to post crazy earnings just to like nobody like I remember like a lot of people on like CNBC that were even saying like they don't even expect Starbucks to get above 96 and they're sitting at 115. So if you want to know what the next one I'm probably going to take profits on, it's probably going to be Starbucks. If anything, there you go. You want to see that this isn't a recording of a video or something like that? Like this is like a real thing. There we go. There's that. So there's some Starbucks earnings. $141 gain. Probably. So whenever I decide where I'm going to drop money at, so there's two reasons I did that, by the way. The the dividend yield sucks because it's just rising so fast compared to like what their actual earnings are. Like a 1.54% is not going to work for somebody who's a dividend focused investor. Also, it effectively pays out in June. So that's something. But let's see where I would put this. So you get to actively see kind of my thought process as I'm doing this. So basically what I would do is I'd probably add a position into, I would say, something that has a low PE. So it would probably, it's look like it's going to be energy. So I'm going to add a position in here. So 578, 5.41, and then there you go. And actually these 44. So what I do next is whenever I have something left over like that, I kind of start looking at this kind of stuff. So I look at Maine. That's kind of inflated in price. Let me look at Pfizer. I kind of start looking around to see like, what is a really good one that pays out on a date that I really want it. So example, PPL. This is another energy company, power company. They have they used to have power for the UK also, which is kind of weird. But they also do Pennsylvania, that kind of stuff. So, this is an easy one. Grab one share. It's got price to earnings. That's a really really nice price, and it also has a nice. It just has a dividend date that pays out when I want it to pay out because I'm trying to build up my off month kind of things. And if you see it pays out on April 1st. So it hits all the requirements. This extra 15 right here, I'll leave that there for the moment. Um, so now, if I go back over here, so you see how this is before I update my spreadsheet. I'll have to manually update this here in a second. So this was at 2194, and now it's at 2206. And now you see how even I'm starting to get here. But that's kind of my thought process whenever I go through my portfolio to kind of move things around. You know, where can I take profits at? Things that are just highly inflated. Like if I see Starbucks come back, so you see I bought Starbucks at $95. I never expected Starbucks to go over 100. It's at 115. I'll keep this position right here because if I sell it, it's only a $100 gain. But if this does end up going down to where I realistically think it could go, maybe like $100 or something like that, I'll add it back in. But as I'm a dividend focused investor, 1.54% just isn't going to do it for me. Now, you might be asking yourself, well, Paul, if you just said that, why are you holding Walmart? Well, because it's Walmart. And Walmart's kind of growing in competition with Amazon. Like they're really keeping up, them and Target. But, you know, there's room for this dividend to grow. And this is also one of those ones that I could hold for another 50 years and know that there's still going to be a Walmart. It's one of those. So this is just one of those ones that you just hold. Um, there's just kind of a few of these that I can just kind of hold these and look back in 50 years. Like Coke. You know, there's a few of these that are just like J&J, for example, not going anywhere. Not the highest dividend yield in the world, but they tend to increase it. I expect Walmart will do the same because they're just making earnings hand over fist right now as they do the e-commerce thing and they just bring in tons and tons of money. I'm scared to hit refresh. Oh my god. Looks like the market is really having a panic attack over this stuff. This is typical market overreaction. And this happens if you go back to the 1 month, or actually let's say the 5 day. Let's see if I can even get this to work on here. Maybe I could pull it up through E-Trade. It might actually work. If you go to the chart, I can show you why the market's doing what it's doing today. So if you go to the 1 month, so we started the month right about there, 3,300, and we're trading about 743 points higher. This is just looking at the Dow. I'm sure, actually, I can promise you right now, NASDAQ looks the same. NASDAQ is even more ridiculous. Like their April has been amazing. So if you go to the 1 month, so NASDAQ started the month out right there, 13,247. Now it's at 500 points higher. It's kind of a similar thing. So it's just people taking profits. It's just anybody looking for a reason to just take profits right now. This gives them a reason to sell. Not everybody hitting the sell button right now. See this right here? Not everybody hitting the sell button right now is a millionaire. That will be remotely affected by this. Like, it's just a starting position from where they want to. Like, you even have people piling in the bonds right now. You know how ridiculous this looks? I don't know. But the market's just looking for a reason to sell. It was up a lot yesterday. That's why I took profits. Like, I sold stuff yesterday. And I had some, I think I posted that on Twitter, and some people were like, well, why are you selling? Well, because this right here. This is why I sold some. I take profits. Easy profits. So if you look, where's that? 21st right here. I posted this actual screenshot. This is literally everything I did yesterday with these little extra amounts. So I sold 2 shares of IBM because it was up a stupid amount. I'm so used to IBM going up a lot in one day and then all of a sudden going down the very next day. So I sold like 2 shares of IBM, even though they have a great dividend yield, but they were up a lot. Walgreens, like I said, I sold that whole position, made bank on it. And like I said, I just put it in, see, CVS right here, put one in the O. O looks like it's going right back to where it was prior to the pandemic, which was close to 80 something dollars. Bought one of Leggett and Platt. Just these ones that just, and I just kind of looking around to say, okay, there are a lot of things are expensive right now. Like for example, Cisco's really expensive. It's up 18% since I bought it, and this is when I bought a majority of my position right here in December. In 4 months, I'm up at 18%. That's a lot. I think JP Morgan is exactly the same. There's a position I added. Um, there's a few of them that are like that. I think the one that I'm doing like really remarkable on is this one right here, 7% in under a month. That's a lot. You don't normally get that. That's normally like an entire year for some people. So you can see the market whips on. Um, there's a lot of people just buying a dip right now. There's a lot of dip buyers right now. If you go in here and see, I'm kind of glad this is happening when I'm making a video so that you can kind of see how crazy the market gets sometimes. Um, so right now, like I said, I'll take profits if I see if I see something that's just really, really overvalued. I'm not, I'm gonna take profits on it. So let's see if there's anything else. What other thing? So the one thing I got here. So what am I gonna end up doing with this one, the QYLD guy? I'm probably gonna up this to about 10%. I saw one guy, his Nasdaq exposure was like 40%. Um, that guy probably is panicking, having a panic attack every time rates go up. He's probably having a good April. I know he was having a horrible March, but I saw one guy. So my theory is I might end up letting this build up until it's like say 20% of my portfolio. I have no problem doing that because this is literally made up of like the Nasdaq. So I know there's really good companies in there. Um, it's actually good profitable companies too. I did a whole video on this. But if you look at it, just really, really solid companies. Um, not a fan of their Tesla exposure, but their Apple exposure, their Microsoft, Amazon exposure more than makes up like, this is 4% of like a very big thing that's very profitable. So I'm not worried about it. But I would probably let that build up to about 20% before I'd maybe stop the dividend reinvestment. I don't even know. I'd probably, yeah, maybe about 20%, and then I would just use the dividend for something else. But 20% is another 4.5 grand, so I got a ways to go. Um, and like I said, it's kind of good that this kind of happened during the market, so it gives me a chance to kind of look around and see what I want to take profits on. But you know, one of the ones you might be asking is why am I still holding this? See this guy right here? That is because this is the spinoff from Pfizer. This is the VTRS guys. Their dividend is starting in June, um, and they're a very profitable company. Um, they're basically literally a generics company. And if you look at their expected revenue, like look here, see this 11.9 billion, and then it jumps up to 17 billion. Like you see this? Like they're a generics company. They're always going to be in need. This is basically like the old Mylan. So Mylan and then a spinoff from Pfizer kind of merged together and had this baby right here. Um, they just need time. Like their dividends haven't even started yet, and they're even starting at a low dividend rate, so it even gives them more time to pay down debt. Um, so this is one that's just gonna. And if you look at the average analyst price target, it's sitting at 18. This is just one that's going to grow over time, so that's why I'm still holding it. This is a long-term hold because I needed more pharmaceutical exposure that's outside of like AbbVie and J&J, and this accomplishes it. It looks ugly. It looks horrible when I sort this because I prefer to see all green, but that kind of thing. But it's like Intel. It's one of these ones that it's just going to grow over time. Intel's not going anywhere. If anything, they would get bought by somebody. But so Verizon's another one of those ones. They're not going anywhere. They're not even going to get bought by anybody because then T-Mobile would pretty much have a monopoly, which they won't let happen. So it's just one of those ones. Um, so yeah, we'll have to see how it goes. Today's a nasty day in the market, but if you know why it's selling off, then you understand that this is like a buy the dip kind of market right now. And then once people come back to reality and be like, oh, I don't make $1 million, it doesn't even remotely affect me. Oh, this has 0% chance of passing the Senate. Oh, that kind of thing. So it'll probably be up tomorrow, at which point I'll be mad that I didn't make a video because everything will be green and I'll be angry. But we'll have to see. So I'm going to use this number right here, and then I'm going to look like a genius investor next week when I post this because tomorrow's probably going to be up like $400. But Yeah, we'll have to see how it goes. Well, I thank you so much for, and just leave a comment if you have any questions.